All right, thank you very much for staying with us. President Muhammadu Buhari on Wednesday signed the startup bill into law. Well, this was revealed by Mr. Issa Pantami, Minister of Communications and Digital Economy, in a post via his official Twitter handle. With the document, companies will be required to obtain a certificate known as the startup label before they can be regarded as a startup entity. In July 2022, the Senate passed the Nigerian Startup Bill 2022 after a report by its Committee on ICT and Cybersecurity. Well, let's get into the conversation as we assess the Startup Bill as it seeks to create and develop an enabling environment for technology-enabled startups across the country. Mr. Ayode Jebo is the Managing Director and Chief Business Officer at Optimus by Afri Invest West Africa. Thank you so much. Good afternoon. It's good to have you on the show. Mr. Ebo, can you hear me? Good afternoon. Wow.
Hello.
Yes, I can hear you. Can you hear me? Hello, Mr. Ebo, can you hear me? Well, I guess there's a challenge with that connection. We spoke earlier. Mr. Ayodeji, can you hear me?
Yes, I can.
Great. Thank you so much. Well, let's start up with this new law and what it means. Just like the PIA that is to attract investment, ease up the oil and gas space. Now we have the startup law. Tell us more about this, particularly as it focuses on the tech space or into the tech space.
Okay, thanks. And I think the law is it's a very positive one because now there's a deliberate effort to focus on startups, which I would also classify as SMEs. When you look at the data, SMEs contribute close to over, in terms of GDP, over 50 to 60% based on activity, and in employment is close to 80%. So that sector is really very critical. So what the Nigeria Startup Act, which Act of 2022, some of the areas where we would expect that it would solve, it's going to be like the intermediary between the startups, which I would say the operators, as well as the regulators. There's been significant challenges for startups. We all recall because of the policy flip-flops. So for a lot of startups are unable to survive. They have to also provide their power, provide their access to distribution. So we believe that this will really come in handy if it's well implemented. And some of the major focal points that this Nigeria Startup Bill would also be looking at is to ensure that it creates an enabling environment for startups. When you are starting, it's always very challenging. I always imagine it like you are taking off. A plane is taking off before it stabilizes. Secondly, they will also help to unravel that unclear terrain that most startups also face. We saw what happened around the crypto markets, and we saw the back and forth within that space. We saw what happened to even the likes of Gokada, that after spending a lot of money, it was banned. So they send very negative signal to potential investment. And I think lastly, the support from local content is also a major area where this act would also play a major role. So by and large, it always looks interesting. Would say its implementation is always very key for us to get results. But I would say that this is a positive move because now that there's a law, there's an act that governs that particular space. That it would help to reduce some of the back and forth, which impacts as financial implication for potential businesses.
Well, it's a good way to look at it. Seems like we have obsolete laws that can't even fit in this time, particularly aimed at attracting investors. The ICT sector's contribution to GDP in 2022 is about 18.42% to the economy. I beg your pardon, was at that. Now, what more can we do to enable this space and tap all of the positives that should be gotten from this sector? Obviously, we know that there's a lot to harness in the tech space.
Okay, thanks. I think the first thing is clarity, policy clarity. So if an investor understands that this is the roadmap within this particular sector, and there's less intervention from the government, because the ICT, which is, if we speak to even the telecoms, they are also going through a lot, because at the point, whenever they try to increase tariff to reflect the reality on ground, movement in exchange rates, the cost of doing business, government steps in to limit the extent of how they can be able to cover their costs at times, which may disrupt businesses. So less intervention once there's clarity would help companies to strive. There are also intervention funds which should be targeted towards this particular set of companies. Based on the act, it's expected that there's a 10 billion fund would be set up. But beyond that, Nigeria, we have always been subsidizing consumption. So I would see startups as enablers of production. So if we are able to fund them, beyond the jobs they will create, they would also reduce insecurity that is also happening in the country. So it's important to focus on that clarity in terms of policies and get that support. The cost of the finance is also a major area beyond capacity building. So once government is able to look into they can look into this and support them in terms of policy consistency, I believe that a lot of startups would survive. It will increase their chances of survival.
Interesting stuff. Now, let's see how that would change the game there. I'm also thinking that the ICT space is something that we should take advantage of, looking at the AFCFTA, so that we don't just look at just manufacturers and all of that. Do you see a space for techie guys or taking charge of that space as the AFCFTA?
Okay, yes, I think we're already seeing that when you look at for a lot of developers or tech experts, a lot of them are able to work remotely and support across different continents. And if we now focus on Africa, so I believe there's potential. It's for us to see how we want to now build a structure within that particular space, such that they are also able to harness the opportunity. These of the tech guys, yes, they may be good in developing the code, they may be good in setting it up from the tech angle. Most of them also lack capacity in terms of running a business. So beyond technology is to enable a business. So what are those opportunities that they can begin to look at, such that the business angle also makes sense beyond building the technology?
Well, let's talk markets now. So, it's always interesting talking tech. We could go all day with that, Mr. Ayodeji. But let's look at the state of the Nigerian capital market. It's been bleeding lately significantly. What is your reaction to this?
Okay, thanks. It's not coming
as a surprise.
We were all expecting that there would be increase in fixed income rates this year, but not as much as this. So what we're seeing now is the reaction to the rising rates in the fixed income market. We saw the last Treasury bills primary market auction closed at 13. And this is a rate, it opened around 5%, I think not about 4% this year. So you would see that because of the correlation, there's a negative correlation between the stock market and the fixed income market. So as we see fixed income yields rise, you begin to see that the stock market becomes less attractive. Because when you look at it even from a dividend yield perspective, the risks you will take, maybe before that, a stock giving you a dividend of about 12%, 13%, looking attractive before, but if you can get a 1-year treasury bills at 13% at no risk, then investors would also help. Even when you look at placements, the bank interbank rates, they are also in double digits. And these are some of the PFAs that are also heavily invested in stocks. They are taking advantage of this high rate in the bank because we also all know that it's always for a while. So you take advantage of those opportunities. So I believe that this is still, it will be sustained, but for long-term investors, because what we always find out is now for those that wants to invest in the stock market, they try to stay away. It is when markets has gained significantly, they begin to look at the market. So the advice would be to begin to buy in tranches over a period of time and wait, because even the high yield environment will not continue for a while, because it affects the issuer. It affects even the government cost of issuing instruments. So that will not also be sustained for long. So it's better, it's now that you take advantage, but having a long-term view, a 1 to 2 year view, which will give you higher return, even higher than the fixed income market if you go into stocks that have strong fundamentals.
Interesting, brilliant stuff, of course, as usual. But foreign players are complaining about repatriation. We even see that in the aviation space. So, of course, that is also affecting trading at the Nigerian Exchange Limited. Now, do you think that we can operate this market without foreign investors coming in? You think domestic guys can hold sway all the while?
Okay, thanks. If we look at the data in the last 2 years, so domestic investors have been controlling close to 70%, not sometimes as a month, when you look at the monthly data, as high as 80% in terms of the activities. I believe that when you look, the domestic investors can control this market. The fixed income market is controlled largely by domestic investors. And in terms of the size, the fixed income market is like ×5, ×6 of the equities market. But we would say that we also need the FPIs, because that's like the liquidity that also helps to pushing the impact of fluctuation in the FX. So I wouldn't say the market can totally survive without them, but we have been surviving, and that is why even earlier this year, when markets were down significantly, we touched like a year-to-date of almost 12% before the rising yield in the fixed income market. Fixed income market is impacting. So what it does, there's also an advantage when you have domestic investors control your markets. It's less susceptible to the fluctuations you see within the global space. So then when the Ukraine-Russia war started, you would see that our market did not blink at all. If not, where the market was rising. But now what we have are both domestic, so it's like reallocation of portfolio for most people that are invested in this market. They are taking their funds out, either to invest in FX, to hedge, or to invest in the fixed income market. So those are the two major factors that is impacting on the market currently.
Interesting stuff. Now, before I let you go, the government seems to be carrying a huge load. I'm talking about loan portfolios, both domestic and foreign markets. Now, my question really is, do you think the bond market will still be attractive to government to take more loans from the public?
Okay, thanks. From the government perspective, because that is like the only source of revenue beyond the ways and means for support from the CBN, they would still, at yes, they would be mindful of the rates, but they have less options. So when you look at even the global market, the Eurobond market, yields are touching as high as 14%, which is expensive for, for Nigeria. So the focus is going to be the domestic market. So we believe that the government will still issue more instruments. They will still absorb more instruments in the domestic market, but we expect yields to react to what, compared to what we're seeing in the treasury bills market, which is the shorter end of the fixed income curve. We are yet to see that adjustment reflect in the bonds market, which we believe that in coming months, it should reflect, because when you look at the curve is almost like inverted now, that we're beginning to see shorter term instruments having higher interest rate than some longer term instruments, which I would believe there will be a correction, because government also needs to fund and meet its obligations, and investors, due to other investment attractive opportunities, they are also very mindful to lock in for a long period at this current rate of 12-13% for bonds.
Let's wrap up in 2 minutes. Do you also believe that this is a time to invest in the markets?
Yes, I believe if we're talking about the stocks market,
Yes.
when you invest when prices are low, you don't wait until when it's high. But the strategy needs to be well crafted. You invest in tranches. We don't know, we can't say this is the bottom. But once you identify stocks that have strong fundamentals, you've seen their first quarter results, you've seen their second quarter results, we're all expecting the third quarter results, then you can begin to take position ahead of payment of dividend next year. But what is important is go in tranches. When I say going in tranches means that if you are to invest 1 million in the market, you can stagger it and invest 200,000 this month, 200,000 next month, such that if market continues to go down, you will also average down. And if market reverses, you will also not miss out totally. So it's a very methodological approach that needs to be adopted to this market. But one thing is sure, once the coast is clear, market will rebound and will surpass its previous high, because we also expect the economy to also rebound. That also applies to those that invest in foreign securities, foreign stocks. This is the time the US market, the S&P is down, the NASDAQ is down. This is the time to also begin to invest in tranches to enjoy that upside potential when the global economy also stabilizes.
It's always a good one talking to you. I've been speaking to Mr. Ayodiji Ebo. He is the Managing Director and Chief Business Officer of Optimus by AfriInvest West Africa. Thank you so much, and do enjoy the rest of your day.
Always my pleasure. Thanks for having me.